algorithms and those computerized generated trades that are hitting the market, and when those results come out. So we'll see what the market gives us any opportunity today, and we'll go with that. And just take into consideration the volatility if you're going to be trading, and just be patient and wait if the volatility is a little bit too much for you. Things do have a way of settling down and getting to a little bit of a range, and maybe that's a little bit better if you're more risk averse. All right, we still got a little resistance around, excuse me, the 22 area, and we shall see what the trade or the market wants to do. Let's see here. We can give you some background. Let's see if there's any other numbers coming out this morning. We did have initial claims come out this morning. We do have existing home sales coming out here at 9 o'clock, and the home numbers have been something the market has been looking at lately as well. So keep that in mind. That's coming out here at 9 o'clock. And in addition to leading indicators, it's another. Both of those could be market movers. Our pivot this morning, for those of you who might have missed them, is 44.12. Resistance above at 22, 31, 39, 47, 60. Support below at 02, 43.97, 84, 74, and 63. As you can see, the 02 and the 97 kind of close by, so there's a spike there at the 97 that the market created a while ago, and so might go retest that. But so keep that in mind if you're going to trade the little area there between the 02 and 97. And again, we suggest we scale around the level because we're not going to be perfect here. And again, the levels are there for us to use throughout the whole day. They are kind of, again, obviously when numbers are out, or when fundamentals are released, like yesterday's FOMC, fundamentals take a backseat to technicals take a backseat to fundamentals. So when the fundamentals come out, kind of the technicals are thrown out the window, and we trade off of technicals. So that's why we suggest when these big numbers are released to kind of let them play themselves through the market, and then we'll trade any after effect that might occur. And there's always after effect, as you can see here this morning. So we'll see what happens. All right. The other thing that's weighing on the market, I think, that's going to be weighing on the market is that it's going to be start discussing it next week, or even maybe, probably next week, is the pending possibility of a government shutdown, which there are a few people in the House that cannot agree, and the broken Congress or government that we have here in the United States that can't agree on anything. So they are just attempting to shut down the government. Again, not a good thing for the market, which also could create some crazy trade here if they do go ahead and not come up with some kind of agreement here. And so we'll see what transpires there in the next week. They have until the end of the month to capitulate here and come up with some kind of solution, or else I think the market's going to start taking that into consideration. And talking about a 39 handle will not be that far away, right? So we'll see. We'll see what they do here. Let's see. Markets are still digesting the latest message from the Federal Reserve, which wrapped up a two-day policy meeting on Wednesday afternoon. The fact that we've come this far, let us really proceed carefully, said Powell. Again, every word that he says is exemplified, multiply magnified to mean something that it doesn't mean or is supposed to mean. And people trade off of adjectives that are just, who knows what they mean, right? Emphasizing that some recent battles won on the inflation but citing risk related to the overly resilient economy and the labor market. On that note, the central bank kept rates unchanged for the second time this year, though investors are watching what might come up next in the FOMC's economic projections. As we are kind of hovering around our pivot here, trying to decide what direction this market wants to go here on these lows. Again, I'll repeat the levels. Our pivot this morning is 44.12. Support below at 02, 43.97, 84, 74, and 63. Upside resistance at 22, 31, 39, 47, and 60. Yeah, so they are going to be, I mean, the market is just kind of absorbing everything. Bond rates is the highest the bond market, the 30-year yield has been since, I think, 2020. And continues to uptick here. The yield right now in the 10s are trading at 443, or probably more than that at this point. But yeah, the 10s are at 4.5 level. It's getting a little tricky as the market downticks here a little bit. Looking at the 02, remember I said the 02 to 43.97 kind of areas of support there. So you're scaling in, but definitely keep your stop in there below the 97. That's for sure. The median projection for the federal funds rate by the end of the year was 5.6, meaning implying one more rate hike, same seen in June projections. Policymakers also increased their forecast for the federal funds rate by the end of 2024 to 5.1% comparatively to 4.6 previous, while the median projection for the end of 2025 rose to 3.9 from 3.4. Fewer rate cuts were seen in 2024. Another reason the market kind of hit the slopes to the downside. They're expecting one more rate hike and then cuts in 2024, but not as many, I guess. 2-year note reflects went up to 5.13 yesterday, marking it the highest 2-year yield on at 5.13 since 2006. Okay, you can see here, bond market not too happy with what's going on. 4.4 on the 4.3 on the 10-year note, which is about a 70 basis point inversion of the yield curve, which has been kind of consistent lately. All right, drifting back here to the pivot area, got down there to about 06, bounced back up. kind of chopping. I think the market will wait for these numbers and then make a mad dash one way or the other. But now still under a little bit of pressure. We'll see what happens. Let's see, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are humbled, lot with much to be humbled about, especially him, since he all right, I'm adjusting back down here. So you can see here, that's what Powell is saying. So he's kind of giving himself a little backup. In terms of inflation, you are seeing the last three readings as very good readings. It's only three readings, only 3 out of 9, I guess, or 12, but depending on how far you go back, right? You know, we were aware that we needed to see more than 3 readings. Oh, we did. The only concern is it just means this: if the economy comes in stronger than expected, then this means we'll have to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. Okay, so basically, kind of, again, remember, these are the Q&As, so when you said something like that, you know, when you're trading, in the middle of trading, doesn't look too good. But again, that's why we, again, he says, people say stuff, and then you continue to sell off here, as especially in the bond market too. So they did not like them. Now we're on the lows there. We're looking at the O2 area. Again, got O2 down to 97, are kind of support levels. Keep that in mind as you're scaling in, and also understand that we're looking probably 3 to 4 or 5 points on our stops, with likewise amount of targets for profit. All right. Just kind of range bound here. Let's wait. Maybe they're waiting for the 9 o'clock to get us some movement one way or the other. So far, this Fed has seemed to add enough pressure on financial conditions, with less fallout on growth and employment compared to previous U.S. inflation battles. That has led the market to price an economic soft landing, which has helped prop up the stock market for much of the year, contrary to many of the initial forecasts on Wall Street. The key question is whether that can be keep on going. Having 525 basis points in interest rate delivered since March of 22 already filtered through the economy, that's a question mark. Or will things hold up if these levels are held through 2024? Whether the curveballs like higher energy costs, student loan repayments that begin, and damaging the labor strikes or a government shutdown, all of those will definitely come into play and will affect, I think, their decision on how long they keep interest rates. Because if they start well, again, you have the laborers, the auto workers, if they continue to strike for a much longer, I think more than 2 weeks, then it's going to be a problem on the economy, which will definitely slow down the economy, which I guess is what they're looking for, I guess. Or it'll get us into a recession, which then might change the whole scenario. Like you said, forecasting is tough, and he's, just covering his buttocks when he says that. Basically, they don't know, but the market thinks they know. All right, we're just kind of range bound here. Bouncing off of our pivot there, that's 12. I can repeat the levels. I'll repeat the levels again, just because we haven't been able to print them up there. I have trouble printing them, so usually it's done by Don, but Don's not here, so I don't know why I can't do it on my end. Pivot this morning is 44.12. I'm sure there was a way of doing it, but I just usually Don's here, but he's taken off a couple of days. No, he makes $65 an hour with benefits, I think. Well, are you talking about the auto workers? Yeah, well, if you can strike and ask, and they want a 40% raise, get you to $85 an hour, not bad. Pretty good. That's okay. No problem. Good information to be had. And they only want to work 4 days a week. No, I'm mistaken. Hey, the bottom line is that, if this continues, it's going to be a little dent, and doesn't matter what numbers are, because look, can they afford to give them money? Probably can. They're making all this money. I don't know how much it goes into their profit targets. Maybe they should give them stock. That way, I don't know. I don't know what they've done. It's beyond my pay grade. It's just we hear a lot of things, we just don't know what the bottom line is, or what the hell they're talking about. Everybody can pick up a side and say, well, they're doing this and they're doing that. I guess COVID is spiking up again, unfortunately. I had to cancel some show. I think it was in Vegas, because some of the backstage people couldn't work because they all got sick. So I guess it's prevalent again. It's just to some small extent, maybe not as bad as before. Yeah, well, when speaking of everything going, technical technology and everything, you're right. I think the initial, policing, the initial problem with the auto workers was when they had big, massive layoffs because technology was taken over and the robots were putting the cars together and blah blah blah. Right? That was the first initial. It seemed, I think, back then that they had to cut like a whole bunch of workers, and it was a big problem. And you get into kind of the same situation, right? I think technology is going to get better, and to counteract, if they have to give them more money, I guess firms or the companies are going to have to probably add more robots. Now we're drifting a little bit down here. We got a little support here at the O2 area. Remember, I did mention that between O2 and 43.97 kind of areas of support, but also remember that the below 97, you definitely don't want to be. They could hit some stops below that level. Our pivot this morning was 44.12, 44.12 as we come down here to the lows. Support below at 02, 43.97, 84, 74, 63, resistance at 22, 31, 39, 47, and 60. All right, kind of coming down here, hitting the 03. Remember, you're scaling in. Just keep that in mind. You have to be a little bit careful down here, but also keep your stop in place. Maybe trade a little bit smaller. You don't have to trade so much because of the volatility. And just scalp, take whatever the market gives you around these levels. It got down to 3 here. Again, you know how I kind of like to scale on a point above my initial level or below my initial level, depending on which way we go, obviously. And so I got in there at 3 on a little bit. Like I said, I'm scaling, so I'm not going to have a lot there on my top end. Got a little bit of a scalp there, take what it gives you, and then look for my next, go down to 02. Got to be a little bit careful with 02, only because the bar just closed, maybe look at a little bit lower, even down to 97, maybe if you're a little bit more risk averse. Just give me a different ideas. Doesn't mean it's right or wrong. Just kind of trying to point out the risk, and then you have to be able to manage it your own way and what makes you comfortable as a trader. All right, come down here to the 02. Again, if it's giving you a little bit and you got scaling in, take what it gives you and then look for the next level down below. You don't have to, just hold them all, right? And you don't have to look for 4 or 5 points, considering, it's kind of a little weak and it's kind of filling you in on the little buying opportunities, but it's also giving a little bit of a pop back up. All right, again, staying here on these lows. We do have a number coming out here in about a minute or so. So, you know, be a little bit mindful of that. All right. Again, number coming out here. Be careful. I'm going to be flat right now, and just see what happens here. Even though I got the 97, 97 is a little close with these numbers. These numbers are pretty big, and any kind of like negativeness. But if you're going to do it, trade it small. Right? If you're going to do anything, if you're going to leave a level in there, just trade it small. All right, we'll see what this number does. A couple good numbers here. Housing starts as a number, and also let's say also leading indicators. All right, numbers out. Come right down to 98, 99 and change there. See how the ladder ticket or the dome kind of lightened up a little bit. All right, just kind of not really liking one way or the other. It's trying to figure out what it wants to do. Again, if you're going to keep the 97, trade it small, but also keep your stop in place right there. All right, market coming down here, down ticking a little bit. Okay, at least it's not running away one way or the other. So if you're going to trade the level, make sure you keep your stop in place. And we didn't have a crazy reaction, but still a little bit weak. And I said anywhere between 02 to 97, a lot of areas of support in there, kind of just, and that's how it's kind of trading. It's bouncing back and forth around these levels here. Got down to 99 there and bounce back up. Again, this little area here, a lot of support, but the number was out, so you had to kind of take that into consideration there a little bit. All right, got down to 99 there. Again, the 97 is a spike low from a while ago. So we'll see how it reacts to that. Again, I'll repeat the levels for those of you who might have just come in. Our pivot this morning is 44.12, 44.12. Support down here, 02 and 43.97. Then below that, 84, 74, and 63. Upside resistance at 22, 31, 39, 47, and 60. And those levels we're going to use as a guide to the day. We can tweak those a little bit. We can adjust those. We can even cancel some of those depending on the price action. I already suggested how we can tweak these little area here between 02 and 43.97. And as you can see, you're just bouncing off of those levels. A whole area there was kind of, and that's how it's trading. But you're taking 2 or 3 points out of these trades if you're getting in, and and then just waiting for the next. I had them all in there, 2, 1, even 99, and then the number came out, so I knocked off I kept the 98 in there. Of course, it stopped at 98.75. I got 98, 97, 96, and then I also that's about it. And I said you got to keep a close stop after the 97 there. So 3 points most. Just that'll be the risk that I take. And then I'll look at the 84 if we continue to downtick. But I took a little bit of profit there against those 3s and 2s, and then kind of canceled the rest of them. Oh well. Oh well. It is what it is. But it's all right. You gotta stay consistent. You know the number was out. Numbers could have moved the market. Don't like to trade numbers, and you just never know what kind of reaction you're going to get to it. And definitely don't want to have a whole bunch of orders in place. They're close to the market. I kept my 97 there when the number was up, but no, that was about it. But it is what it is. See what it wants to do. Definitely under pressure here, so you have to respect the market and then see what happens and continue to slowly downtick. The market definitely not liking what's going on with the FOMC yesterday, and also the bond market not liking it whatsoever. And again, like I said, there is talk of a shutdown, the UAW strike, definitely going to add to pressure on the market for sure. We got a double bottom there at 99, maybe 75 there, and pop back up there for a bit. Again, if anybody has any questions, feel free to ask in the chat. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we gave out, and in addition to any price action opportunities that might occur. All right, popping back up here, a little resistance around the 10-11 area. Hello there, Henry. Glad to meet you. Are you new to trading, or have you traded before? All right. Well, good place to come. We are trading futures here. We're looking for opportunities to scalp. We're trying to take advantage of ebbs and flows of the market. And we have levels that we gave out this morning, and we use those as a guide to our day as far as setups are concerned. Setups means trading opportunities, whether to go long or short. I gave out these levels early this morning, and we kind of use those throughout the whole day. I can repeat the levels for you if you want to write them down, and then I can explain to you some of them, what they mean. Our pivot is 44.12, and support below is at 44.02, 97, 84, 74, and 63. Upside resistance is at 22, 44, 22, 31, 39, 47, and 60. Those are areas that we are going to have orders in there against the support and resistance opportunities that we're going to try to trade against. We don't believe markets go straight up or straight down. Consequently, we're looking for those areas that gives us those areas where the market will pivot and give us a opportunity to scalp, meaning to take advantage of the ebbs and flows. So resistance areas would be sell areas, and support areas would be buy areas, and we're trying to find those areas to give us our ebbs and flows to take 2 points out of some of these, 3 points out of some of these trades. Each point is worth $50 per one contract. So you can do the math. If you want to do 2 contracts, $100 a point, so on and so forth. So we also offer coaching classes or education based on what we do and how we do it and what we're looking for as far as areas and how we find these areas and how to trade them when you get into them, especially if you're new. So that's what we kind of do here on an everyday basis. So welcome. And we're trading mini S&Ps, which are index stock futures, which are very volatile, also very liquid. Sometimes it's volatile, sometimes it's very slow, depending on the day and what's up. Yeah, obviously, the market's reacting to the FOMC results from their meeting yesterday. All right, market is bouncing. We said we had resistance around the 10-11, got right up to 9 area, and then came off. So again, if you have any questions, feel free to ask in the chat. Oh yeah, Mike, of course. Tomorrow, right in this afternoon, for sure, no problem. But yeah, just we'll just remind me in the morning, and we'll set up a time tomorrow morning. Yeah, just remind me in the morning when I get in, and we'll figure something out. All right, we can see here we went right up to our blue band there. Our blue band there is some of our traders like to trade against when you get back to it, and off of a high or a low, and that's what it did right there. Off of those lows, came back. Now, if you're going to trade the get down here to 98.75, so and a double bottom, gotta be a little bit careful there against the 97 now for sure. It's there. It is a spike low. The 98, the double bottom here is a little bit of a, could be a little bit of an issue. So you have one signal telling you to sell through. The other one is that's a problem. Well, initially the double bottom or double top is a good support area in this situation. Good double bottom would be a buy, but a push through a double bottom or double top would be a sell through or a buy. Momentum trade. So when the market creates double bottoms or double tops, obviously there was some in this situation, the 98.75 area. There was some buying that came in that we can't see sometimes because it happens so fast, and that created a little push. So obviously, there was some interest there. If the bears lost that battle against 98.75, if they come and retest it, support. You can use that as support as and then have your stop right below it, and or because that once we pierce that double bottom or double top, it usually continues a little bit longer because then the bears who tried to push it down initially will try to do it again, and that gives them a reason technically to do it or to the punch to the upside if we get a double top. It's bullish when it creates it, but then you don't know when it creates it because it hit it and then bounced up. It's right on the turn of the bar, the minute bar. So it's tough to catch, but if you can catch it, you can use it as you can use it as support and then put your stop right below it. In this situation, because it's a double bottom. All right, coming back up here, we did bounce off of our blue band there. If you're a blue bander, talk about the significance of that all the time. We had a nice rotation. I'd be a little bit careful now if we come back up here. So it just created a double top here, but the bar is not closed, so it's not really a double top until the bar closes, technically. I'd be a little bit careful there against 12, even though it's coming back to a pivot, even though I did say we have some resistance between 10 and 11. If you're going to take it, it's a little aggressive only because we did bounce off with the blue band. Again, I try to explain the risk, and you have to know your risk tolerance and then act accordingly. There was some resistance there, but it's got weakened by the fact that we bounced off of the 08 area with our blue band there, almost 9 area. All right, and then market coming back up here a bit. 12 is our pivot. Maybe you take that, but if we get above 13, we could go a little bit higher. So keep your stop tight if you're going to trade the 12. All right. Again, if we have a little resistance here, if you're a little aggressive, but keep a tight stop there. Anything above 13, you want to be out of any shorts. Seems like we want to rally here. They coming off, bonds also picking up their legs a little bit. All right, there. Thank you there, Philip. You have a good one too. All right, market continues to uptick. We're looking on the upside. We just at the 22 area. I don't know if we're going to continue to rally or not, but definitely, I said the 10-11 area was not as strong because we bounced off of the 08. And to keep a tight stop, you didn't have to really, if you were going to do anything at all. Otherwise, just kind of just wait a bit. All right, continue to uptick here. Got resistance up at the 22 area. Again, the downside support there was pretty strong, but again, if we get below that 43.97, if you're going to trade later on this afternoon and get below the 43.97, it does open up the door to a lot lower trade. All right, continue to uptick. We said anything, got to get the tight stop there if we're going to take any sale against the 10, 11, 12 area. It's our pivot, getting some legs here to the upside. We're looking at the 22 here as our next resistance area. All right, again, this kind of bunched up a little bit. Again, we had resistance around and we do have resistance around 22. Got up to 14 and change there and came back down a little bit. But again, we don't trade this slow choppiness here. we need a reason to trade, and we layer in reasons to trade in our education course that we offer. And if it fits with one of our reasons, that's great. If it doesn't, that's okay too. You don't have to trade. All right, just kind of again chopping around here a little bit. There's this is what I call the no trade zone over here, so we have to be a little bit patient and wait. All right, we're just kind of range bound here, bouncing back and forth here, and this is like I like it. This area here I like to call the no trade zone only because it just went up to 14, came back down here, could easily go back up. Very tough to try to figure out where it wants to stop or not. Consequently, we're just going to be a little bit patient here and see what happens. We got support down 97, but again, keep a little tight stop there. And above 22, kind of in the middle here. Let's be a little bit patient. Well, it's simply because it's trading in a little bit of a range here, and it's bouncing, it's stopping at areas that maybe make sense, maybe don't make sense. It's a lot. We are trying to find areas that we can focus in on to make a little bit of money. At least we need a reason to trade. When it gets itself into a range like this, it's not really giving us any reasons to trade. It's just going back and forth and kind of just going nowhere and stopping at kind of levels that don't mean anything. So we need, if it's, we don't know where it's going to stop because it's just trading in a range. When it trades in a range like that, it's just the traders are just getting in and out. Some of them are reacting to some news, some of them are not. They're just kind of pushing the market back and forth. They're not extending the market any one way or the other. So when it gets itself into a little range trade, it just from a trading standpoint, you would be guessing as to where you want to buy it and where you want to sell it, because it could continue to go down and you're buying it because you think it's going to stop. And we're not going to be trying to trade here on thinking where it's going to stop and where it's going to not stop, or where it's going to go up or where it's going to go down. We need good reasons to trade. And when it gets itself into this range, there's no really good reason to trade. Okay, so that's why we call it a no trade zone, because we're looking for reasons to trade. Consequently, those reasons have to, technical reasons to trade, and they have to at least make themselves present when it gets itself into a little bit of a range that they're not so obvious. I don't know if that makes sense, but all right, Peter, see you tomorrow. All right, we got down to, I don't know, 3 and change there and bounce back up. Kind of just bouncing around here. All right, as you can see, we are popping back up there a little bit, kind of like I said earlier, kind of tough to know where it's going to stop and go. Consequently, we have to just be a little bit patient here. Upside resistance will be up at around the 22 area. All right, again, kind of range bound here a little bit, so we have to kind of just be patient. Upside resistance is at 22, and downside support there and around the 97. The important thing to remember here when you're trading is not that we're trying to just trade for trading's sake. We're actually trying to trade to make money. Consequently, just getting into a trade because you see the market kind of moving and you think you have to trade is not a good reason to trade. We're looking for good logical entry points so that we can try to make money. We're not here just to trade for the sake of trading. I know sometimes it becomes you're sitting in front of your computer and you're watching the trade and you're like, I got to get in, I got to get in. But the reality of it is you have to find a good reason to get in. And patience is important when you're trading, especially since you're watching numbers flicker around and you're thinking, okay, well, is it going to stop here? Is it not going to stop here? Should I buy it here? Should I sell it here? There's no reason to be guessing is my point. And so instead of doing that, we're just going to just wait until a good opportunity presents itself for us and then trade that opportunity. Now, is it going to be a good trade or a bad trade? We don't know. All we know is it's a trade. And there's a reason for it. And as long as we have a good reason for it, then we'll go with that and trade it and see what the market does at that area. All right, so we kind of rallied, not coming back down. Again, kind of going nowhere fast. Again, we do this every day here, so we have to be a little bit patient and wait for opportunities to present themselves. And there's nothing wrong with being patient and waiting. We are always looking for trades, but we also focus on the morning hours to give us those opportunities. And the morning hours are what we are, up till about 10 or so, 10:30. And then after that, the trade becomes a little bit more one-sided. The dynamics of the trade are different than what we're looking for. There's a lot fewer traders trading. There's maybe some more ebbs and flows that don't fit with our methodology. There's more volatility, one-way trade going on. Those are all factors that you have to consider, that we consider, and we also try to stay focused and trade the morning hours because we feel that the ebbs and flows do better for us during the morning than they do in the afternoon. All right. Again, we've bounced up, coming back down here to these interim lows, range-bound lows. So markets are really not giving us any direction whatsoever. I mean, it's down on the day, but it doesn't mean it's going to stay down here. It doesn't mean it's going to go up. We just don't know what's going to happen. It could stay like this the rest of the day. And remember, there's always tomorrow. So no reason to. If you don't have a good reason to trade, you don't have to trade. And again, like I said earlier, we focus on the morning hours. We can use the levels all day long. They are doable all day long. And like I reminded everybody yesterday, when there's a number like fundamentals, like FOMC, the fundamentals trump the technicals. So when there is news that comes out, a report that comes out, a geopolitical situation, the strike, impending strike or the strike that's happening right now with the UAW, if any news that comes out from there, or if there's going to be a government shutdown, if there's news from there that could affect the market and create some volatility, it'll run through the some of these technicals that we have, because fundamentals do trump the technicals, and that's why we're always keeping our stops in place, especially if you're going to trade during the day and we don't know that somebody's going to say something or somebody's going to create some volatility. And so that way we kind of protect ourselves a little bit by making sure we keep our stops in place. Again, if anybody has any questions, good time to ask, because we're coming here to the end of our morning session. And we did work our lower level support areas there a little bit. I worked you through it. I talked you through it a little bit in regards to how we were trading it at the time. And then there was a couple numbers that came out at 9 o'clock that created didn't really create too much volatility. It just kind of stayed on those lows, and we pushed off of those lows earlier. But right now we're just kind of range bound here, and kind of going nowhere fast at this point. Forex is where the foreign exchange trades, which is the currencies, and it's also a future. So the contract is a futures contract. It's just called the Forex because it's called the foreign exchange, and that's where they trade futures on currency valuations. There is obviously agricultural futures. There's financial futures. There are stock index futures, forex futures, foreign exchange futures. So they have branched themselves into all kinds of future derivatives to trade, and that kind of keeps the industry happy. It has nothing to do with being more profitable. It has to do with volatility and liquidity. And you have to find a market that actually is liquid to trade, has some ebbs and flows in it, trades well technically, and you can try to make a little bit of money on them. you can make money on most of these exchanges if you know a little bit about what you're trading. I don't personally like. There's energy futures also, which is oil. I don't like to trade the forex. I think Forex is kind of